Let me come to you as the DFS Secretary, the Banking Secretary. I am reminded of many previous budgets after that huge bad debt crisis that the Indian economy went through, our public sector banks also went through, where in every budget we used to go through the fine print of what is it that is being given for bank recapitalization, what are the thoughts of the government in that regard. If not much has come to light, it perhaps means that things are under control. But from that point of view, how would you tell our audience and our viewers is the health of India's banking system, and more importantly, to support the kind of growth, credit growth, that this 1 lakh crore tax rebate may likely entail?
We are likely to pay about 22,000 crores as dividends to the government this year. And our NPAs are lowest ever, 0.57%. Our gross NPAs are again lowest, it's around 3%. We can't get better than this kind of help to the banking sector. Now, since we are doing so well, we also taken very active interest in promoting credit to, in fact, segments where earlier we would have not actually done the credit. For example, we are actually now increased credit to SMEs up to 100 crores. Mutual credit guarantee scheme we have launched recently. Up to 100 crores we are giving. Now, credit enhancement we have done. And we also giving with the credit guarantee the scholarships to the students, including the foreign studies. We give to anybody who's admitted abroad, we give the scholarship without collateral thing. That is guaranteed by the government credit guarantee scheme. This year we have announced PCE, partial credit enhancement facility for corporate sector from the NAFID. And for the KCC, Kisan Credit Cards, again, we have enhanced from 3 to 5 lakh without any collateral. And all these measures are intended to provide more credit to the segments which are needed most, and also promote investment and also employment in the country.
One quick follow-up. If there are concerns around credit growth, there are also concerns around deposit growth in the banks. The banking system has been saying that there needs to be something that is done in terms of tax treatment to reduce the differential between fixed deposits, which are a source of capital for our banking system, versus mutual funds. Not much was done with that. Is that an issue that has come to your attention? You have spent time on it?
I have not spent much time on that, because ultimately, as the society becomes more financially literate, everybody, including you and me, would like to keep our money in the fixed deposit. Okay, we don't keep it in the current account or savings account, where the interest is lower compared to mutual funds or long-term investment plans. So I think banks need to look at mobilizing more resources from non-traditional ways of doing it. This is how the banking industry developed, and it will develop. As citizens become much more literate financially, we don't want to keep in accounts where we don't get anything. Now, as I said, the tax relief the government has provided, we would, I think, likely, because of, our assumptions indicate that we may get a bump anywhere between 42 to 45,000 crores into the deposits, which will enable the banks to lend more during this year.